Welcome once again to our continuing YouTube video series on taxes and the law. My name is Christopher Neufeld of Neufeld Legal, and in this particular video we'll be discussing capital gains taxes in the Canadian context because these taxes are very much jurisdiction specific. So what is capital gains tax in Canada? Well, in Canada, what you're looking at is, first of all, you're looking at your capital gain aspect, but you're not looking at a specific tax per se, other than to say that when you're dealing with capital gains, you're looking at the taxable portion thereof and having it taxed as ordinary income. But since you're only taxed at 50% of the value of the capital gain, it is a far more effective aspect of taxation for the taxpayer. So what you've already done is you've taken your proceeds of disposition, subtracted your adjusted cost base, and your expenses and overlays in the disposition, and you've come to your capital gain. Now, once you've got your capital gain, you would take that, multiply that by 50%, and then subject that to your ordinary income tax rate. And that would get you the capital gains tax on a particular transaction. Now we have to then contemplate the fact that there's offsets available such that you might take capital gains that you have and subject them to capital losses that you might also have. And these capital losses do not necessarily need to be incurred in the current year, but they could have been incurred in prior years. And even more opportunistic, you have the ability to draw back and readjust taxes from subsequent years, all the while manipulating and modifying what your net capital gain is. And by having that modification take place, you are able to modify the amount that is subject to taxation, and in turn your resulting capital tax, or capital gains tax I should say. So there's a fair degree of adjustment, modification that is available. So even though you might hear from myself in this video some simplistic determinations as to how one comes about with determining what the tax is, you have to go through all these various steps and procedures, typically with professionals, both accounting and legal professionals, to make the appropriate determination as to what the tax that is payable is. And remember, as always, tax avoidance is an issue with Revenue Canada. However, tax minimization is permissible, subject to it following the tax code and applicable laws. So, and that is where you really need to be engaging with knowledgeable legal counsel, tax counsel, and accounting professionals so that you are doing things appropriately and according to the tax laws that are out there. I trust this YouTube video has been informative and has provided you some insight into those aspects of capital gains tax and what it means in the Canadian context. context. Thank you.